Platinum hovering around $1,000 per ounce has recovered from earlier dips, with reduced production from Russia and South Africa boosting prices. However, demand is predicted to moderate due to slower growth in the automotive sector and industrial use. Gold, as of October 2024, the precious metals market has been influenced by global economic conditions and geopolitical events. Gold prices have surged past $2,700 per ounce, driven by safe haven demand amid geopolitical uncertainty and inflationary pressures. Analysts forecast further upside, potentially reaching $3,000 by 2025, as central banks maintain high gold reserves due to weakening confidence in the US dollar. Silver has rallied to over $33 per ounce, benefiting from increased industrial demand, particularly in solar energy and vehicle electrification. Supply concerns from key mining regions and its critical role in green technologies are expected to sustain its upward trajectory. G'day folks, welcome back to another update. Today we're looking at platinum, gold and silver. And first we look at the trends on the monthly, weekly and daily for platinum. And you can see there's been, platinum's pretty much on the monthly has been fluctuating within this range between around $800 to $1,200 per ounce. And it's currently just above its moving averages on the price chart. There's no CCI for the monthly chart. On the weekly, it's already broken above that CCI moving average, giving us a bullish signal. Likewise, above the moving averages on the weekly price chart. And on the daily, that's also been hovering around that, above that moving average range since around the 15th of October, and also above the moving averages on the price, giving us a slight bullish signal. Now it's hit this minor resistance at 1020 and had a bit of a pullback, but it's actually still above that, so still bullish momentum and only taking long trades on the smaller time frame. So if we look at the micro view, using the daily as a reference, taking long trades only, you would have been safe taking some of those trades when the CCI on the 1 hour chart broke above the moving average band on the CCI and close it out when it hits within that moving average band again. So again, enter there and close it out on that red candle, the first red candle there. Enter again when it breaks above there and then close it out again when it hit that red candle at the top there when that CCI hits that moving average band. Now notice when it enters the CCI range, it's actually an early exit signal as opposed to waiting for it to break down into the moving average of the price chart. So just be aware of that. It's actually giving you an early warning to get out of the trade when it hits that moving average band. Now since then, on the hourly, it's been dropping off below that moving average band. But today, in the last hour, it's actually got a fresh breakout to the upside of that moving average band. So potentially you can go long on that candle there and let it ride. And just be careful of that. Again, watch for a break below that moving average band of the CCI to close out any profits if it gets that far. For gold, on the trends, we look at the monthly. That's been well above the moving average band for a number of months now. And the price likewise is at a very meteoric rise and still going. On the weekly, we've got a bearish divergence here, lower highs on the CCI versus higher highs on the price. And that's still traveling and is still giving us a trajectory of a bearish divergence. So if I extend those trend lines, you can see there lower highs on the CCI versus higher highs on the price. So just be aware of that. We may see it pull back to retrace, and the retrace will be a minimum. If I was to, let me just expand that. If I was to draw a retrace level, the Fibonacci retrace, assuming it starts pulling back from there, of course it can keep going higher, in which case we need to extend that trend line. Let's assuming it starts pulling back from there, we take it back to that previous low before that divergence started, would have been that low there, and the minimum target range is a 23-38% target range retrace, so we expect it to drop to at least that level there. That's assuming it pulls back from there. Of course it can rise higher, in which case we'll have to readjust our Fibonacci ranges. That's on the weekly. On the daily, again, we've got a bullish movement on the CCI above its moving averages, and the price is still rising. It's actually broken above this previous resistance at 26.85, and it's still going, so just be aware of that. And if we go to the micro charts, using the daily as a reference, only taking long trades, you can see there it's actually broken above the moving average range, similar to platinum, and that'll be a fresh entry. So again, enter long there and wait for it to break back into that moving average range of the CCI to close out the position. So that'll be a fresh entry on that hour, on the current hour for gold. Lastly, we'll look at silver. Now on the monthly, it's still bullish, well above its moving average range of the CCI and also the price chart. That's also now approaching the 3,500 level. On the weekly chart, there was a bearish divergence there. Now you'll notice it actually broke down and we pulled it back to that low there. And that was, in fact, we probably should take it to that level. That was the previous low before that divergence started. So let me just zoom in. So you can see there it actually fell in that 38% level. That week broke into that level quite easily. So we always take it back to the previous low before the divergence started. Now notice the CCI is starting to retrace and bounce off its moving averages, giving us further upside. So that divergence may have already played out with that candle on that red candle there, with that the wick breaking into that 38% target range. That's the weekly. On the daily, we had another bearish divergence here. That already broke down within that range. You can see there. So if I draw a Fibonacci range between that high and that low, that was the 38% level. It's not drawn properly, but you can see there it's within that range there. Let me just, oops. Let me start that again. So the Fibonacci would have been from that range there. That was the range before that divergence started. And if we draw that target range and pull it up to that level, you can see that it's actually broken right down into that 38% target range very easily, and then it bounced. So currently it's broken above that divergence and looks like it's now touching this, about to touch this resistance at 34.27. So be careful about going long. If I go to the micro charts, now you'll notice here we only take long trades based on the daily, but you'll notice here we've got maybe a few pips to go before it hits this resistance, and the CCI hasn't broken above its moving average range yet, so don't go long yet until it breaks above this. But I'd like to see it break above this resistance to be more positive and bullish. If that's still below that resistance, then I'd just be very careful about it may actually bounce further to the downside. So I'd like to see it break above this resistance to be more positive. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page, and links in the description below.